Hello everybody, hope everyone is doing well. Hope you are starting to digest some of the points of information and you are now hopefully getting to a stage where a lot of my thought processes in the market are now absorbing into your own mental sphere. So we just broke down GA and gold. GA messing around, gold below those levels, decision time for gold. My other focus on gold, just to reiterate, is obviously the wicks that have been thrown to the downside, which is a little bit of a hazard. So we do have, and again, this actually translates as a hourly small region, just there, this minor area of support. Okay, so if I was to copy, paste, that's that same area I did explain on the last video. Wanting that to break, and then gold should start to break down. So I'm happy with what I've gone through so far. Let's see if I can share some more gems and shed some more light on current market situations on GU. So, GBP USD, similar price action, quite similar to GA, which we've already had a decent go of marking up. Alright, so let's get started. Highs obviously ran into area. And then we take the body of the candle and bring it across. So what's actually happened here is the market's then broken down. So the volume of the A to B move, which can be classified here, I can see A up to B. We had A, B, pull back. A, B, pull back. The market, if we then go ahead, and if I just clear that hourly time frame, there you go, that's the breakdown. We are still below that. Again, worst case scenario, pound could come into that to fulfill specifics needed to then push the price back down. But again, because we're below the shoulder, which I've mentioned right there, and we've actually not taken that out today, I'm looking for the rollover to start ASAP, really, probably in the US session. Okay, so area 1. Great, fantastic. Area 2. Now, look at, we've gone from A to B, A to B, A to B. I'm classing this as B because we've had this large pull back today. And we are hopefully about to start the move of the rollover, bam, and then lower, bang. What's important here is to see, okay, where is the movement? Where's the place in which this could be A to B. Now, A to B is going to start again. So we could even merge Fibonacci with this as well. I'm not going to get into Fib just yet. I don't want to be confusing you guys, but 1, 2 doesn't meet the 61.8 criteria. But if we look here as to where this volume spike has came from, look at what we have. We have bearish candle, bullish pull up. So the market's actually pulled back up, and then what we can maybe do is take this area and then layer it onto our 4-hour region. I've spotted that early as hell. That's been spotted very, very early, and this can really, really help us in the next move of sterling. Now, what I suggest is, because we found that zone, once price... Okay, so what's happening? The zone's here, then we have spike, spike, spike afterwards. Volume push to the highs. Sorry, 1 second. So I've received some crazy information. CBDC, card payments, cash demand, central bank report. I'll read that afterwards. What I'm looking for is now market to roll over. Once we are below this area, okay, and then we spike back into this zone, we are then looking for, okay, see you later. That will give us the push necessary, I believe. So we spotted that at a very early stage. This is the most recent and relevant one right now. I don't really need to go into any other specifics apart from this one right here. Look at this. Da-ding. Can you see the widths of each region? It's a lot different. So we're going from significant highs into lows. We're going from lower highs into lower lows. We could maybe even print one down here as well. if I was to look at, there isn't really anything here I can put on solid, to be honest. The candles are a little bit too big, too wide. One that I would suggest, if I had to, is in this region, in this range, see where the volume is pushed in, then the market quickly snaps back. Then we have the collapse back into the lower territory of the range. This right here, this candle, if I took that and brought that across, that could be a region as well. But I don't really need to do that right now. Again, I can keep that one on by eye. But here, look at what's suggested. Bringing it over to the hourly. Bringing it over to the hourly. So let me take copy and paste. There we go. This now becomes a lot easier to break down and place trades from. Vital that we take the 4 hour. Again, that's why I'm giving you guys key steps so we're not confused. Then we can just come into the hourly and the 15 minute to find that entry and execution. I'm already in the trade, but once we break back below here and maybe we test into this zone, I will be looking for maybe some spike behavior, then slam this with a decent risk reward setup into the overall target of, it could be this one, or it could be, see as I'm using these and just flinging them on when I need them on, and then I'll just delete the whole structure on the hourly because I want to keep this clean. I want to keep my mind clean. When it comes down to entries, the entry chart needs to be clean. I repeat, clean. So we'll just take it as it comes. Use all of the 4 hour and daily analysis and the bigger levels over here, translate it onto the hourly and the 15 minute to get those pinpoint accuracy entries, and then the risk reward is always going to be very, very good. So I know we're on, after like lesson 10, I will then start to do live market analysis every day or every few days, and then we can go along with the market, and I can show you how some of these regions may change over time, and sometimes the market will just play back and forth into the areas, and then I can then show you how I would manage the hourly and the 15 minute with the specific zones. Last one to place on is copy, paste, and I will also take that cheeky 4 hour, copy, paste right there. Now look what's happened here. We have the confluence buildup of the 4 hourly, and we also have now the 4 hour region. Look where the spike has taken us. This up here, this is an area in which we want to place a stop. So that's where my stop is for this trade in particular. But also it's okay, cool. If this fucking thing breaks, we're going to probably be pumped into this area. If price pumps into this area, we can then wait for reversals back to the downside, or we can wait for a price breakthrough, depending on how 4 hourly momentum is looking at that time. Very easy. It's not, but I'm trying to make it look easy. So now there's 2 hours left on this 4 hour candle. After this video, to be honest, with this trade being on, it is now 12. I've been recording for a good few hours today. So we've just hit noon. So what I will then do as part of my day, I don't really have any responsibilities today, no family or anything like that to take care of. I need to then go to the fucking gym. So I'll go to the gym for like an hour, sit in the sauna, but I'll monitor from the gym, monitor this trade. But I'm looking for the US session to start around 1:45 2 p.m. That's when, so there's going to be a window in like the next 30 minutes until then, and then I would expect maybe the US session to drop the sterling GBP USD into new territory lows. So I wouldn't just sit here and watch the chart if I got the trade on. Multiple trades, I'll go into that on my psychology videos, but I will not go in and place multiple trades right now because I kind of missed the boat on GA. GA is extremely sloppy and messy. I'm quite glad that I moved my stop towards break even on that trade rather than just getting stopped out and then watching this play out. To be honest, because I got stopped out on that, one of my tips is to, if you are stopped out on the trade, win or loss, ideally at first, once you get an experience, just to close that trade for the day, that chart for the day, sorry, and move on. Just to stop revenge trading. I am not in any emotional state about this whatsoever. I've trained myself to be stone cold when it comes to emotions, trading, and money, because I know that the next setup is always going to be around the corner. So I'm not going to be rushing in to find other trades right now, especially if there's nothing there. I mean, gold will be the potential next one that I could look for, but as long as we actually stay above the hourly region right there, we can actually start to head north. I'm only really interested in gold once it's clearly broken out of Exhibit A and Exhibit B, daily and 4-hourly region. Once we're breathing above that and the candlestick is showing me like firm closure, then I can say, okay, cool, carry trade back up into target 1, target 2, and whatever it may be. But for now, there's not really much there, so I'm just going to sit on my hands with sterling running and go ahead and enjoy my day. After the gym, I'll probably come home, I might make some food, or I might just go out somewhere for food. Today, I have the psychology videos. I'll have a few more of those to record, so I'm probably going to do some in the office and some back at home, and then just kick back, really. And once I've got this bulk content out the way, I can then go in and just do live market recordings and show you guys more ins and outs. And that's where like the real learning can begin. You're going to have to go through these videos quite a few times, to be honest, in order to understand some of the concepts. But when I'm rolling on live markets and we can see this stuff play out and gain a confidence together, then it's going to be a bit of a game changer. And that's when your learning curve completely accelerates through the roof. So I'm quite excited with that. Okay, cool. So with that in mind, coming back to the 4-hour, let's just finish this chart off. Let's just finish this chart work. We have a huge barrier here. That's why the wick has been left behind. But we've gone from A to B. So we've gone from A to B, A to B. And again, just keeping it simple. We don't need to go into all of these fucking... There's a lot more going on behind the scenes as to what I'm putting in my head. I have in my head, but I'm not putting onto the video, sorry. But just keeping it simple, A to B. We don't need to know all of this other fancy stuff and, you know, think that we're some kind of genius for knowing more than the next man. Even though, yes, we do, especially in this new material now, a lot of people are going to be made to look very, very silly in this Forex game. But A to B, A to B, A to B. So what we're now waiting for is a new A. This won't be B because it needs to take out that area, but down into B here. That's all we need to know, guys. And that there will fulfill all of my desires on pound for these 4-hour regions and ranges. If it does roll over and dip into this area right here, we have to think as well, where is the last wave? When I say wave, the push to the highs, so right now, I'm just going to mark this on, around here, anywhere around here really, there is going to be retail stops from people going long on pound who have not yet taken positions out, who may be swing trading. So we have to consider anywhere around here, which more or less coincides and lines up relatively nice at this level, that pound needs to come in and sink through, push through, and then just destroy. So be aware, market psychology. Alright, so 13 minutes into the video, we have USD CAD to do. I know USD CAD is going to be boring as hell. I wouldn't even, well, it's a good pair to trade, but it depends on the condition of the pair, to be honest. I don't really like it too well. My main focus is GA gold, and I might even just start to look at GBP USD again, just for the sake of the videos going forward, so we can keep up to date with the markings and whatnot. But USD CAD, it's not highly favored, but you can have a play around with it. It's good as a base to start with because of the volatility is relatively low in comparison to other currencies, especially some of the yen pairs. But I know it's going to be relatively boring as we switch across in a moment. So overall, I'm not really focused entirely on these zones down here. You know, I cross every bridge as it comes because we can say, okay, level tapped, we can rebound. And what the currency pair can then do is tap this level. New day starts, pull back up into that region there, which we've already have marked on ahead of time, and then sink into lower areas. If obviously we have our daily, which is going to serve very, very well for future if the market does roll over. But from there onward, we have the huge drop. And remember what I went through about the quarterly on the quarterly chart. That could be a significant projection for sterling. That could be the significant projection for sterling. What really assists us with this chart though is actually spotting the drawing I've just placed on at a very, very early pace. And I'm talking early this morning. And we can clearly see the A to B move, which is being fulfilled right now. And then we can gain the confidence and grasp the complete understanding of where the next wave will occur and why, where the money will go from A into B and why, then where the money will go once A and B has been formed, then we can get on and we can translate that information to the lower time frame, i.e. the hourly, in order to pick up and be ready for the next trade setup. So A to B, we can take that out, we can be ready for potential long, and we can use counter trend movements in a very, very safe and sufficient way and a confident way on the lower time frames, hourly and 15-minute, because we know exactly where money is being held, money is being sent to, and where the market needs to go next, in alignment with the daily and the 4-hour / intra-week cycle. So let's look for one more leg to the downside on pound, and then we can go from there and we can be ready for the next move. So probably around 100 pips to 120 pips will be in and out, and we just have to wait 1 hour 48 minutes for this candle closure, and let's see how this one performs. All right, so from there onward, we're pulling up a little bit. So I'm going to just delete some of the arrows I've labeled on the chart. So I can maybe I'll keep the other ones on just for video purposes. So look at GA. GA is a little bit of a mess as well. So sterling is a mess across the board. All right, so that's that. Let's move on to dollar CAD. USD CAD, guys. Let's have a look. Now, we have a breakdown in price over here, bearish engulfing. I'm not going to go ahead and put that region on there. It's too widespread. Candles, it comes with practice and by eye, but some of them are just a little bit too OTT, because this entire region, yes, the market can come back into. Yes, I will be mindful of the price if it does pop back into that region of we can reverse anywhere around here. As an example for the video for you viewers, there, boom, I've took the whole candle, brought it across. Market can come back in anywhere into this region and then maybe reverse, but for now I'm not going to pollute the chart. I'm going to keep the chart clean. Chart pollution is against all rules over here. So the ones I'm looking for, immediate, we've gone from A into B, and look at this. So we have this small candle which is pulled back up, and then the price has been driven to the upside, and it's always the one after the last force. So force 1, force 2, low after the previous low, markets pull back up, and then the price has run in the opposite direction. So right here is where I would go ahead and layer one on. That layer right there, it coincides with 1.3250. So what are the confluences? Let's just label them. We have the daily level, we have the psychological level, and we also have the area on the 4-hourly where the market, boom, pins back from. Now look at here, spike, lower boundary tested, up, spike right back into the region, next candle, momentum, shifts. The shift in price behavior is the recognition of, okay, this area can be reached again and the market will be driven and magnetized back into that zone. So, magnetization, that is an extra area now as confluence for a target. We already knew that, but it gives us extra confidence. Market will go there. If I go into this region where the weekly is, across here, I would look at this 4-hourly, and I would definitely go ahead and draw a level across there. 1, 2, because you can see the spike is revisited right on the bodies. I'm not going to do that now, but I'm just labeling that for you, highlighting that potential. Now over here we have drive 1, drive 2. After drive 2, market completely reverses. So what I'm going to do, I'm going to use this. So we have the drive, bearish candle, and then the one afterwards there at the body. Okay, I'm going to plot on, bringing that across for future reference. This could be a long shot. Right, over here, I'm just going to extend that in accordance to that. So looking at the prospectus, we have target 1 on USD CAD waiting. We need to break this 4-hourly. Once that 4-hourly is broken, it's free fall into this zone. What can then happen in this zone? I won't get too excited about holding the shorts. I would get out of the trade. Why? Because 1, nature of the pair. We know that it can consolidate like a madman. 2, we can actually rebound heavily from that area. and maybe go back into this region before falling. So you don't want to just waste money on the table. That's why translating this into the hourly is vital. It really is vital. One more that I've just spotted here is, can you see where this shoulder has occurred? Bang, and then we've ran, so the volumes come up, and then boom, we have A to B. So we could translate A into B, A into B. So by I can see that the first candle after the bump there, we could maybe layer that up too. So what USD CAD could potentially do before it goes into the lower regions is break through area, boom, retest area, and then boom, provide another potential setup for a scaling order or just a complete short if you were to be more conservative. Upside here, as you can see, the volume is forcefully pushed into 1.3300 and then the secondary candle, so you can go ahead. I'm not going to leave this one on, but you can do that. So there, if we did spot that at an early stage, it now makes sense as to what the market is doing afterwards. Spike into the zone, bearish engulf. Remember, as I said, the second and third touches back into the region. Note this shit down. Write notes. Is where we're looking for potential trades. And there we have the third one, bearish engulfing. There's an entry right there after the third bearish engulfing, the third tap where the wicks, keeping the high right there, and then we can more or less take the currency pair below these levels, back into the level, and then down. That's a fucking great risk reward setup. So I'm going to keep those ones on. I'm going to put that block there, range, whatever you want to call it, rectangle, and just have that more or less mapped out on USD CAD. I hope that made sense so far. I really do. Come on, Sterling, show me some love. Doesn't want to show any love today. This is why you have to sometimes just distract yourself. You don't want to be watching this stuff all day. Set your orders, set your stops, and I'm going to give you, again, video 10 onwards, I believe, especially on some of the live trades and live market analysis pieces. I'm going to be showing you guys where to place stops, where to place your targets in alignment with what we've done so far. And as you pick it up as time goes by, you can then just place your trades and then just go about your daily business in peace. Obviously, use your 1%, 2%, 3% risk, however you want to manage that. I can only preach that so much. It's complete. I can't, I can say 1%, you can just put 50% of your account on a trade. So I'm not going to go into like full details. I will do a breakdown on money management though, and I'll do that on a whiteboard. So everything else is going to be up to you. But long-term edge, if you follow this stuff and you keep your risk consistent and you keep your stress levels down and you continue to just work on just a few currencies, I would just follow me, GA, gold, GU. If you just do that and you put that work in, life becomes so much more easier to manage with trading. So as I say, you don't want to be just watching this price go up, down, up, down, up, down, up, down. We know what's happened. We know where it can potentially go. I could go to the gym and then I could check my phone and then price is all the way down here. I'd be like, oh shit. Looking at the, the profits on MT4 or whatever terminal you use. And it doesn't really become a burden to your day overall. The psychology videos, if you guys have already watched them, I mean, that is what it's taken me to get to this level and, gain that mental construct of strength. And if you guys take them tips and if you guys follow what I have to offer here, then you can really transform some of your horrendous past events, because I know a lot of people have horror stories, we all do. If you're a fresh slate, if you're a fresh whiteboard, fresh canvas, then you can really start to build and gain a full steam ahead approach to the markets and the currency pair. So if you just, again, GA, gold, GU, follow suit, keep up to date with it every day, your chart work then becomes minimal because you know exactly where the pair's at. You start to memorize all of this stuff. And yeah, you don't have to be looking at the screen all day and burning your eyes out. Right, just checking my notes. 1 second. All right, tiling the chart done. Arrow line first. drive areas done. Liquidity, I'll go into that again as we go along in the videos. Candles and wicks, I'm going to do a specific video next on which candlestick formations to focus on, and a little bit more about the wicks, because we need to look for specifics and really tone down what we're looking for to actually enter the market. So I'll do that video, and once I've done that video, then I will start to go into the hourly. I'm going to go into the hourly across the board. I'm going to go to the 15-minute across the board. And then from there on, guys, it's going to be market catch-ups and tracking progress overall over the next few weeks for me. And then I'm going to have a little bit of a break. So yeah, so far so good. Sinking price into levels, target focused. I've already mentioned that by tidying the charts, keeping it clean and precise, we're going from the weekly, daily, 4 hourly. There's 2 processes on the 4 hourly, which I've now explained, with a maximum limit of 4 for these areas, my purple ones, and then my zones, different stages, different widths apart, heights apart, whatever you want to call it. And yeah, I'm now looking for consistently finding entries on the hourly. I'll always come into the hourly and 15-minute. You're going to learn this shortly, but I'll always go for the overall price projection. So that is how, guys, we're going to get the best risk-reward setups. Your risk-reward is always going to change. I will do a specific video based on risk-reward, and I think, with the live market exercises, I'm going to be throwing that in there anyway, and you can see how dynamic that world is, and how, yes, sometimes we can enter on the daily, yes, we can enter on the 4 hourly, but always come into the hourly, then into the 15-minute. If you found a setup on the hourly, don't go into the 15-minute. Again, I'm going to teach you all of this and I'll show you my insights onto how I handle those time frames. Cool. All right, I think that's good for now. Yeah, all right, cool. So I'm going to lock this video off. Next one's going to be about the candles and the entries, and then we're going to get into the lower time frames, and then we're going to start tracking the market and kicking the shit out of it. All right, thank you.